GM. Trade of the day. So, gonna break down my Bitcoin long trade in detail and explain where I'm at now and where I'm gonna go next. So, initially, the reason for taking the trade was a few things. If you go back, I've covered this in Trade of the Day and trading analysis all the way throughout the last week or two. We come all the way down and we took out that 40k low and took out that level. The narrative was all sell the news, sell the news, sell the news, sell the news, sell the news. We had 1, 2, 3 pushes lower. And at that point, sentiment was toxic as fuck. The market seemed to not want to go much lower, right? Because we came down, consolidated here, pushed lower, and immediately pushed back higher. So the first thing was a low time frame break. Right, we saw a low time frame break in structure over here. This was a 1 hour MSB. And that was my first little sign. When we got that, I then mentioned that I wanted to wait. This was on Tuesday, it pushed up. And I said I was going to wait and observe how the price action is moving with regards to these bands. Because if we're going to reject off the bands and go lower, it should have rejected here, pushed down. It didn't. It pushed back up. It pushed down again. It pushed back up. So the longer price was consolidating in at the bands after 3 pushes down. That's when I said, yeah, long is the play. Sentiment and all that is on top, but sentiment's not why you actually trade. So the first target I had was basically 42k, which was just slightly above these levels here, but it was basically right around 42k. That was TP1 that we talked about. And then TP2 was this liquidity here. So that's TP2. And when I said TP2 and TP1, it doesn't mean, when I was first trading, that's where I would just put my orders and leave it. I now manage my trades more actively, but it's just areas of interest. Right? It's like, if it gets to here, I will observe and take profit. If it gets to here, I'll observe and take profit. If price, is giving me signs that I should. So we got the squeeze, we got that compression, the bands got tighter, price chopped around for a few days. We then got a nice impulsive move up on Friday. I also mentioned that we had an options expiry on Friday and the Bitcoin would not be above 42k at OPEX. OPEX came and Bitcoin got as high as about 40.5 and then it pushed up and we touched 42k on Friday night after the options had expired. So that's a little bit of options alpha that you can use as well. Keep an eye on those monthly and quarterly expiries. The prices, strike prices on those can offer decent targets as either support or resistance. The reason why I was so aggressive, and I traded this very aggressively, which is why I'm exiting most of it earlier. I traded this aggressively because I knew that if I was right, I would catch the early trend and probably 2 legs, which we've had. 1, 2. Now, is there going to be a third leg? Probably, I would guess. I wouldn't be surprised if we chopped around and then had a final big push up before we go lower, if we are going to go lower. But I don't know. What I do know is if I'm right about the reversal, you'll have 1 leg and you'll probably have a second leg. Like very, very likely of 2. It's certain you'll have 1. Right? If you're correct about the reversal, you'll certainly have 1. And typically what people do is they try and fade that first one. Like, oh, that's it. Oh, that's it. We've topped. But then you squeeze a little bit higher. So I don't need it to go to 45 if I can position myself correctly to have an aggressive trade with my confidence level high for this part of the phase. I bought spot at the lows, and that's why you buy spot. If it goes higher, I'm still max long spot. We're trying to get into the mind of the short-term trade. If you remember a couple of weeks ago, I talked about how my focus for trading is long only and very short-term. If I'm taking anything on top of my spot bags, it's short-term moves. Because I think the market's in a phase now where it's probably going to be a little bit, back and forth, flip-flopping of bias. I don't think we'll have clean trends for the next few weeks. I think it'll be recovery mostly. And so when I saw that, the reason Obviously, the liquidity level is clear here. That's an obvious place for stops. That's why that's targeted. Obviously, 42k with some stops around here as well, plus the round number. But more so than that, is just look at it, and this is obviously subjective, but it's quite clear to see. If you shorted the ETF pump, you're safe. If you shorted here, you're safe. Even if you shorted that first breakdown at 45, you're safe. Anyone who shorted in here is not safe, here is not safe, and here is absolutely not safe. And I talked about this all week. I was like, not safe, not safe, not safe, not safe. And so what have we done? We've taken out all those stops of people that were in bad areas to short. We're now getting to the place where, people who shorted up in these areas, it wasn't necessarily a bad position to short or to sell. So is my confidence in a long as high up here as it was down there? No, it can't be. Because now with every passing day and every green candle, more and more people are starting to get bullish. Oh, is the bottom in? Is the bottom in? It's like, well, why do you think the bottom's in at 44 but you didn't think it was in at 38? Right? Doesn't mean they have to long 38. But if the people who were fearful down here, which was pretty much fucking everyone on Twitter crying, are now saying that they're long, I don't want to be long with those people. I just don't. If I was bullish when they were bearish and it turned out to be right, doesn't mean I'm a genius. There'll be plenty of times when I'm wrong. But if I was bullish when they were bearish and it was right, and now they're bullish, how should I feel? I should at least feel neutral, which is basically how I feel. For long trades on top spot, I could not be more bullish. High time frame, up only. We're going to 100k. Fucking, this is all just noise. Right, that's my spot view. But long trades, short time frame, you have to trade psychology. You have to trade other people and their behavior. You're basically trading against their behavioral biases. And so this trade has ended up being 12.3R realized so far. And I want to break down why that is. Because you can see here, this is the screenshot of my exchange. Ignore this, right? I want you to ignore that because that's a scalp trade I took at the lows. Where I started filling the long was here, right? And as I mentioned, I filled it in a bunch of different orders with an average of around 39.7 or 39.8 or something. But the reason for that, like I said, was when we got the 1 hour market structure break over here, that confirmed to me that we were likely in an uptrend. Now I don't buy there because I know there has to be consolidation. So I waited, I ended up buying all the way over here. So I saw this, I saw price come down, I saw price push again higher, great. I saw it come back down, sweep those lows, come back down, sweep those lows, and that's when I started to fill. That was exactly what I wanted to see. If this rejection went lower, it would be bad. The fact it pushed back up was telling me that now we'd formed a really solid bottom for our consolidation, right? We'd pushed off the lows and we're now consolidating. And if I'm right about it going higher, well then it should go higher. So that's when I started to fill orders based upon any little pullbacks. Anytime essentially Bitcoin was dipping below the bands or reclaiming the bands, I was adding. And so I added most of it there. Initially, and here's where the 12R comes from. Initially, my stop loss is wider, so that's how I do it. So like when I filled the first one over here, my stop loss was down here to begin with, right? Because I don't know if a stray wick, if I go to sleep, a stray wick is going to catch me. But then, as the trade progresses, my stop loss eventually moved up to, once we started to reach up to this level here, my stop loss moved up to the bottom of that consolidation, and then I added more aggressively on the breakout, which you'll see in a second. So initial risk was wider, but as price does what you expect it to do, like I never expected price to come here, but I wouldn't have felt confident putting my stop loss here necessarily, because that's so easy to get stopped out. Like even though here it didn't, on another day that wick would have went below and stopped me out. So you have to have a more a wider stop, be a lot less aggressive initially, and then as price moves in your favor and consolidates and does the things you're expecting, then I move it up. So by the time we got to here, my stop loss was at 39.5, and then as we broke out, I added. So once you got the confirmed breakout, I did the very same thing that I've talked about to blue belts. If you're blue belt, you'll know this. Strong breakout with volume, candle closes above, get onto a lower time frame and buy here. So that's exactly where I bought into this retest, bought into the retest of the bands, or in this just general consolidation, and then we pushed higher. At that point, my stop loss has moved up. So at that point, I moved my stop loss to break even, which was around here. So my stop had moved up from 39.4, 39.5, up to about 40. Because if I'm adding here, I'm saying I don't think it goes there. Otherwise, I wouldn't add there. Then we got up into 42, and I took some profit initially. Why? Well, stick to my plan. Right? T1 was up here. TP1 was up here. So I took some profit. But that wasn't like me calling a top. As you can see, obviously I stayed long. That was, I want to take some profit here because that's an area I said I would expect a reaction. And let's see. So I got that reaction. Waited. Allowed price to continue playing out. So price went down a bit. Rallied back up. Took out a high. Dipped and into a little bit of what looked like low time frame weakness to me at a lower high. So took some more profit here. Took some more profit here. Then we broke down further. But I was watching to see would support form, and it did. So as we pushed down into this low, I saw this nice reversal candle, and then the sweep, and I bought more on both of those. I had more orders set. If you remember trading analysis set, I had orders all the way down to 39.4 or 41.4. They didn't get filled. We came up, consolidated, boom, away we go, and up to where we are now, right up into the second take profit level, which is up here. This is all explained in Purple Belt and to my masterclass students, like really in depth about how I compound trades. But I wanted to just give you like an overview and an idea of how it works and how I did it. And in a simple sense, you start off like this. Starts off like that's your position. So initially, if you just let the whole thing run, it would be 3.38. But as you're able to tighten up the stop and increase size, right? And then you're able to add at higher prices and move the stop up. Each of these additional positions, as you pyramid it, it compounds. It compounds the position, lets it grow. And it only works in trends, right? If you trade this type of way, you have to be sure that you're getting some type of trend. Which is why, after just a straight downtrend, I was confident that I would get one leg, two leg. If you know, you're never going to know the future. If you can estimate that you're going to get two legs, then you can take this type of trade. But you can't do this if you're trading in chop. This is the big difference, right? You're not going to compound trades in here. If you're getting long down there, you better be exiting up there. Because it's a chop. It's a consolidation phase. Whereas, in contrast, if you get long down here, and then you get a breakout and you can add, right? All the way up until you have to have some type of invalidation. And eventually you end up getting stopped out probably over here if you didn't close up here. But that's fine because you're long, and you're moving your stop up all the way to where it's in profit. But there can be big swings. There can be big swings in your unrealized profit because you're carrying a bigger position, you've compounded it, your stop's moved up to where last night I had taken 6.8 hour profit before I went to sleep. So if we look at it from the screenshot, that was from this, here, right? So in those three take profits, I had realized a total of 6.8 hour. Then I'd added a bit back on, and I had my stop loss moved up into profit. So even if I had got stopped out, I would have had another 2.8 hour. Because at this point, by the time I went to sleep last night over here, my stop loss has moved up to this low. So even if it came all the way back down, I would still be stopped out in profit. But when it's sitting here, I'm in even more unrealized profit. That's how whenever it went and hit out the stop loss and hit out the take profit, and took profit and realized half my long position, the jump was from 6.8 hour realized profit last night to this morning 12.3. But that also means, like I said, if that had went down to my stop loss, I would have had 2.8 locked in. Understand? So I was able to lock in another 6 hour profit roughly from price hitting that target, and that's only half the position. But if the position had have reversed and went back down, I would have lost that 6.8 that I locked in, and the other 6, that 6 I locked in, plus the other 6 unrealized, which is still open. So at that point, you're managing a bigger position, but it's a far bigger swing. The potential is greater, but I have to say this because I know everyone's going to be tempted to do this. First of all, just don't even attempt it until you get to beyond blue belt. It's simple, right? If you're not trading frequently yet, just don't do it, because it's hard enough just to enter stop loss, take profit, and just trade systematically. Because it all sounds great, but if that went wrong, I would have given away 10 or 15 R in unrealized gains. Still would have ended up in profit, and it's easy to say, oh, still ended up with 8 R profit. Yeah, but if it was at 20 R at one point and you end up with 8, you've given away money. So you have to be either be okay with that, have that managed, understand your systems, understand the profitability of it, understand the probabilities, and understand as well that when these trades go right, there's a few of them a few times a year where they go right, and you make sort of 10, 15, 20 in a typical one, 20 R. Then obviously if you catch a really insane move, you catch 30, 40, 50, 60 R. But they're the outliers. You don't really bank on those or account for those. But let's just stick to the normal ones. Let's say 10 R, 12 R that I currently have. You also have to remember that there's going to be a bunch of times where I enter and I round trip, and I either close at a break even or close at a small loss or close at a 1 hour loss. Because you can't just every single trade you take expect to make 12 R consistently over time. You'd be a fucking billionaire in no time if you were able to do that with any kind of high win rate. So it's a totally different type of trading. And there is literally this time here, this move has been the first time that was viable since here. Right? That was one of the areas where it goes up only and you can buy, compound, away it goes. This one, I don't think it necessarily does what that one has done. But you buy, compound, and that's it. Like, none of this in here was that. None of this was that. There was no clean trending in here. This was all consolidation, right? Not trend. You had this little one here on the low time frame where you could. But it's not very frequent, and for obvious reasons. But the reason I say this is that in a bull market, these are the type of moves you do get more frequently. Right? You're not going to see this in a bear market. You'll see it on a short squeeze maybe once every few months. But in a bull market, you're going to see coins all over the place doing this, more frequently. Probably once every week or two. You could see a different coin doing it. But if you're sticking with Bitcoin, like once every month or two. Maybe a bit less, maybe once every 3 months. And so that's something, again, you can go do whatever you want. But my advice is, don't even attempt this until you get to blue belt and beyond. Get to purple belt. Where I'll literally teach you how to do it. Not just saying it here on theory on a stream. On a video. And when done correctly, this is a big boost to your trading portfolio. This is separate to your spot bags. Your spot bags should be 80% of your portfolio. But this is a good way to boost the trading portfolio. So, GM, see you later, live stream. 5 p.m. UTC, GM.